I think all investors out there, especially the one involved in public markets, they have seen the rise of these Bitcoin treasury companies. And there are a lot of questions around what's the next phase, what this company can do with the strategy, what they should do to make this strategy sustainable. What's next? And what do you see being actually the key to build upon this trend?
What really fascinates me, it's how not only the US government has probably understood it is in their interest to devaluate the dollar, but in fact, if you look at it from a really macro point of view, you will realize that the US government is taking all the steps that are needed in order for the Bitcoin to become the next currency of the US. In fact, today, almost 60% of the Bitcoin belong to US entities. So in fact, is in a way of they are organizing the future so that the dollar devaluates and so that they don't have to pay the cost of the devaluation because they will own the Bitcoin. This is the investment thesis of the Bitcoin Treasury companies.
Welcome back to the Financial Fox. My name is Steffi, and every week I bring to you some of the greatest conversation that I had and really interesting people that you should look at, follow. And obviously here we share some of their thoughts and views on crypto, Bitcoin, digital assets, and obviously innovation in finance. Today on the show, I'm really excited to be joined by Yves Choueifaty, who is a mathematician by education, but also is the president of Tobam, a global asset manager that has been really early in Bitcoin and one of the leading investors in Bitcoin Treasury companies. So we are going to be talking about a lot, obviously from an investor perspective. So I'm sure that you will find this interview very interesting. Definitely if you are a CEO of a board member of a company that is looking at Bitcoin Treasury Strategy, but also if you are an investor as well, looking into these assets, what you represent. And yeah, so really excited for bringing Yves to all of you. Now, before we get into the show, just a couple of things. Remember that all the content on the show is for informational purposes only. I need to say that it's not intended as financial advice, and any opinion expressed by myself or my guests are ours alone, and you should never act solely on the back of them. Why? Because it's important that you do your own research, you level up your skills, and you are accountable for your own decisions. That's crucial in any kind of investment, but also I would say in anything that you make in life. Then I'm going to ask you a big favor. If you are watching this interview on YouTube or on other social media, please take some time to subscribe to our channel or follow us. It's really important to have your support to grow the channel so we can educate more people about Bitcoin. And finally, a big thank you to our partner and sponsor, Hive Digital Technologies, one of the fastest growing publicly listed Bitcoin miners. This year, they have been achieving some amazing milestones, completely laser focused on making the company super efficient. And remember, they are going to quadruple their operational footprint, representing 3% of the global Bitcoin network. Hive was also the first crypto miner to have an AI strategy. And very important, they are fully focused and committed to sustainability with the green power data centers in Canada, Sweden, and now Paraguay, where they are really growing their operations. Their focus is on scaling a lean, shareholder-driven company that makes a positive impact on the communities they serve. Now, if you are a brand or a company interested in exploring, then you should check out the Buzz HPC, which is the AI subsidiary for innovative solutions. If you want to know more about Hive, check hivedigitaltechnologies.com. Now, let's get into the interview. Yves, great to have you on the show. How are you doing?
I'm doing very well. It's my first day of business after holidays, so I am in a perfect shape for business.
Fantastic. Where you have been?
I have been in Switzerland, in south of France, and lastly in Lebanon.
Okay, interesting. Very interesting. Well, nice holiday. Listen, let's go straight into it. Tell me about Tobam.
Tobam is an asset management company that we launched in 2005. Tobam stands for Think Out of the Box Asset Management. And the goal of Tobam consists into providing very sophisticated clients with exposures that are not yet offered by the reference players. So the idea is to about 65% of our clients are, sovereign entities. So as either sovereign wealth fund or central banks or public pensions. And we try to offer them what BlackRock is not doing yet. Well, this is what we do. The idea is not to compete with BlackRock, but to prepare the field to BlackRock and to do what BlackRock is not doing yet. So we started in 2005. Roughly, I think we co-invented what became Smart Beta. In 2013, we began exploring Bitcoin. In 2016 and 17, we launched the first open-ended fund invested in Bitcoin in the world. So this was roughly 8 or 7 years before BlackRock entered passive management in Bitcoin. And this year and last year, we started a new business line around Bitcoin. Because when Bitcoin is doing passive, it doesn't make sense anymore for us to do passive. So we move to enhanced. And we try to enhance the performance relatively to Bitcoin.
What that means?
So this means that, in fact, there are a few companies across the world. I think your T-shirts tells a lot. You have a few companies across the world that try to deliver more than the performance of Bitcoin. It's something that we have. I think we began investing in strategy in 2020, and we invested more and more. We published earlier this year, in March of this year, an article that we wrote a couple of years ago that really analyzes the performance of strategy. And we have written an article, a scientific article that really deciphers and explains properly how come strategy is and will continue to outperform the benchmark, the Bitcoin, if you take a few assumptions. We launched a series of funds that are invested in Bitcoin Treasury companies, and we really, I think that we have an investment thesis which is very precise on those companies. This is roughly what we do at Tobam.
Okay, question. I think all investors out there, especially the one involved in public markets, they have seen the rise of these Bitcoin treasury companies. And there are a lot of questions around what's the next phase, what this company can do with the strategy, what they should do to make this strategy sustainable. Just because when a trend is a trend, everybody, jump in. And some players, they really don't have the knowledge, they don't have the expertise, they don't have the relationship to actually make this strategy something that is sustainable and deliver value to shareholder in the long term. So now we are in the space where has been a trend, is a trend. You have more and more companies from any sector, right? They don't need to be just doing a Bitcoin treasury as the main business. They can be AI, healthcare, whatever. Starting a Bitcoin treasury strategy. What's next? And what do you see being actually the key to build upon this trend?
Okay, our approach to this trend is the following. Let's look at the fundamental. What is, in fact, the investment thesis? You have an investment thesis for Bitcoin, which is quite clear. What is it? It is that the economy is only about trust. Whenever you go to a shop and buy some water, you have trust in the fact it's effectively water, and the merchant is trusting you in the fact that you are providing him not with fake money, not with a fake Visa card, etc. So it's only about trust. And in fact, whenever you have a system based on trust, you need to have a cornerstone. And the cornerstone of trust for centuries and centuries was gold. The problem with gold, it is that gold is not auditable. If I tell you have 5 bars of gold, you cannot trust me. Because the only way to audit my stock of gold is to melt it, to check that it's effectively gold. It's something which is very, very difficult. And to have a cornerstone of trust that you cannot trust itself because it's not auditable, it's really difficult. Since the Second World War, the US dollar replaced gold as a cornerstone of trust. And more people are nowadays convinced that it is in the objective interest of the United States to devaluate the dollar. Because the US government has enormous amounts of debts. And it makes sense for the US. The US government has carried a very heavy weight by being the cornerstone of trust. It's in fact very costly for an economy to have a very, very strong currency. And more people are convinced that it is in the US government interest to devaluate the dollar and to, in a way, remove the dollar from being the cornerstone of trust. If if gold cannot be the cornerstone of trust, if the US dollar will not remain the cornerstone of trust, we need a new candidate. And the next candidate is obvious. It could be the Bitcoin. The main difference between the Bitcoin and the dollar, it is that you will never have more than 21 million Bitcoin, and you have potentially an infinity of dollars. Now, what is it that you want to buy? Is it something which, is absolutely in a limited quantity, or is it something that is in infinite quantity? Why am I asking you, what is it that you want to buy? Because the economy is about labor. In fact, the proof of work that we all provide to our bosses, to the companies that employ us, they pay us in dollars. They pay us against a proof of work. And so it's not Satoshi that invented the proof of work. The proof of work is money, in fact. And the problem with the dollar, it is that the Federal Reserve can print as many as they want of it without having to, deliver any proof of work. So I really believe that the investment thesis of Bitcoin, it is that it's not in the interest of the US government anymore to have a very strong dollar. And if the dollar fate is to be devaluated, we need to find a new cornerstone of trust. Now let's talk about the investment thesis of Bitcoin Treasury companies. I really believe that the business model of Bitcoin Treasury Company, it's a business model that started in 1694. In 1694, a group of businessmen in London, they organized a meeting and they decided to create a company which goal, if you really analyze it in a very simple fashion, you will realize that the goal of the company they invented in 1694 was to raise capital in order to buy gold, then raise more capital in order to buy more gold, etc. And they decided to call this company the Bank of England. In 1800, a statesman in France called Napoleon, he was not yet an emperor, he organized a meeting between the most wealthy 100 families in France, the 100 most wealthy family in France. And he told them, you need to do like the English. You are going to create a company. The business model of this company will be to raise capital in order to buy gold. And we are going to call this company the Bank of France. And the Bank of England and the Bank of France were amongst the most prosperous companies in the world until they were nationalized after the Second World War. And I think that to have companies across the world that are raising capital in order to buy Bitcoin is probably something that makes plenty of sense. Those companies are going to really store a relatively large quantity of what will become the cornerstone of trust in the future, and they will play a role, financial and economic role, that is going to be crucial. What really fascinates me, it's how not only the US government has probably understood it is in their interest to devaluate the dollar, but in fact, if you look at it from a really macro point of view, you will realize that the US government is taking all the steps that are needed in order for the Bitcoin to become the next currency of the US. In fact, today, almost 60% of the Bitcoin belong to US entities. So in fact, is in a way of they are organizing the future so that the dollar devaluates and so that they don't have to pay the cost of the devaluation because they will own the Bitcoin. This is the investment thesis of the Bitcoin Treasury companies.
You think about the sustainability of it. So the investment thesis is clear, but obviously the way that you buy Bitcoin is by raising money, raising debt, and that put sometimes the company into a situation that it might not be sustainable, right? Just because of the volatility of the assets, which we said, volatility is vitality, that's fine, but it's still a volatile asset. So if the goal is buy Bitcoin and just keep it there sitting there, what about if the company get into a situation that too leverage is too much, right?
No, of course. So you need to, of course, it's not about, it should not be about leverage only. There is a book that describes that relatively precisely. It's a book written by a Nobel Prize of Economy called Friedrich Hayek. Friedrich Hayek wrote a book in 1976. The title of the book is Denationalization of Money. And he explains that, in fact, many companies across the world are going to compete in the way they run their stock of wealth, of cornerstone of wealth. In the book of Hayek, of course, he was not mentioning about the Bitcoin, but he was saying that private companies across the world will own large amount of wealth and will issue debt. And this debt is going to be used as, in fact, a currency. It is the debt of those companies that is going to be the next currency. And the next currency of the world will not be Bitcoin, because Bitcoin is not practical. You have a limited number of transactions per every 10 minutes. The size of a block is limited. Bitcoin is really, in my mind, the next standard of value. But people will not exchange Bitcoins on a real-time fashion in order to buy, a flat, a car, or a bottle of water. They will exchange debts that are issued by those companies that own the Bitcoin. And in fact, there will be a competition between those companies in order for the debt to be trusted. And it is the model of asset liability management by those companies that will compete. And they will compete. Each of them will have a different model. They are going to compete, and they are going to try as much as possible to inspire trust to those who are going to buy the debt. And I think it's the way strategy is doing it is really extremely interesting, because they are issuing a growing number of debt that is not jeopardizing the asset itself, because in terms of quantity, volume, etc., it's relatively small for the time being. As soon as a company issue too much debt, the debt will not be trusted, and it's going to have impact on the price of the equity, etc. So it's something that will take place in different dimensions, mostly in the US for time being, but some companies are also starting with smaller size in Europe, in Japan, and in other countries. And I think it's competition that is going to select the good business model. I am relatively convinced that given the microeconomic situation, we'll probably not have a very long bear market anymore. So I don't believe that there will be long bear markets for Bitcoin. So I'm not very worried about the asset liability management of those companies. But still, they will need to inspire confidence, and they will have to show the market an asset liability model which is sustainable across time.
You have been one of the earliest investors in this space and kind of cornerstone investors in many Bitcoin treasury companies. Can you share with us some criteria or very important points that you look when you are assessing an investment opportunity?
So we have many criteria, and we have a due diligence questionnaire which is roughly 12 pages. And
Okay.
we look at many details. For instance, we want to make sure the custody of the Bitcoin is done in a good fashion. We will look at whether those Bitcoin are insured or not, whether there is an insurance company which guarantees the Bitcoin against fraud, etc. But we look also at the capital table of those companies. We want those companies to be almost started with investors that would be able to follow the growth of the size of the company across time. So it's important for those early investors not only to invest in the beginning, but to be able, to follow a little bit the growth of the size of those companies. So I would say that I would summarize what we look at with 4 bullet points. The first one is the purity of the model. It's really about Bitcoin for time being, Bitcoin only. It's really about systematic use of proceeds. We don't want those companies to raise capital and to do plenty of things with the capital. We want them really to buy Bitcoin. We look, of course, at the legacy business. We don't want cash flow leakage. We look very carefully at tax. In some countries, The tax system is not very stable, so it would be very, very dangerous for this kinds of company to have, unrealized gains that are subject to taxation. And we look also at we systematically do a regulatory audit of the company. The first chapter is the purity of the model. The second chapter is transparency, and we need them to be extremely transparent on their assets, but also on their liabilities. And most of the companies today provide you with analytics that are really, disclosed on a real-time fashion. And it's something that we believe it's very important. We need an existence of a premium. We don't want an MNAV which is too low. We need a relatively high MNAV. If the MNAV is too low, it's something which is really we need some kind of a high premium. And the last subject is a strong ability to raise capital. I think that the MNAV is justified by the fact that there is a strong ability to raise capital in proportion to the market cap. So it's normal that an entity with a very, very high market cap will have more difficulties to increase capital by 10 or 20%. So it's important for us to be very comfortable with the fact that the company will be able to raise capital in the future, either in the form of debt or in the form of capital. So those are really the four largest criteria: purity of the model, transparency, existence of a premium, and justification of the premium via a strong ability to raise capital in proportion to market cap. So we look at the cap table, we look at the exec team. We want also a retail team, retail market, which is supportive. So all of those criteria together will make us less or more confident on a specific case. Then we need the right instruments. So typically we've launched an instrument which twice we innovated, once with Capital B, and when they launched, convertible issued in Bitcoin directly. And we innovated again with Smarter Web, with a much shorter duration convertible, which made us able to invest relatively large amounts with them when they were able to issue what in our mind was the perfect instrument of investment.
Very interesting. Obviously, it comes down a lot to the management team, right? Because there are a lot of things that you said, and even the ability to raise capital. I understand when something is hot, everybody want to kind of invest, but being able to inspire trust is obviously key for any kind of future increase of investment in any kind of company. What do you think about leveraging the Bitcoin Treasury to make money?
So, to make money,
to generate revenue, let's just say that.
To generate Bitcoin yield, let's be precise. The idea is really, the central idea behind Bitcoin treasury companies is to provide Bitcoin yield to clients. So you want to use leverage. You want to use leverage two ways, in Bitcoin and in fiat. In the beginning, I believe that it's very reasonable to raise debt which is denominated in Bitcoin in order to really have a perfect control on the default risk. So for smaller companies, I think it's important in the beginning of their capital raising to issue convertibles that are denominated in Bitcoin. Otherwise, it's very risky. And when they have a certain amount of treasury in Bitcoin, I think it's reasonable for them to begin systematically issuing bonds that are denominated in fiat in order really to take advantage of the future appreciation of the Bitcoin in a more direct fashion. And this is what really Strategy was able to do. As you know, they benefited a lot from the price increase of the Bitcoin. And it's important for the companies as they grow to leverage a little bit a part of the treasury, to leverage it with different duration. I think that it's reasonable for them to have perpetual debts, but it's also reasonable for them to have an optionality to increase their Bitcoin yield over a different, set of maturities. I really would love to have a few companies that issue debt over 6 months, 3 months, 1 year, 2 years, 3 years, 5 years, and perpetual. I think it's important for us to generate a full yield curve, a full volatility curve as well over a different set of maturity, because we need to raise capital from clients that are very different from each other. Some of them have really a mindset which is very, very long term. Some of them need a liquidity which is closer, and we need to issue a whole set of instruments across a varieties of maturity at the end.
I'm going to come back to the investor point. Just want to ask you something very quickly. Do you have an investment thesis beyond Bitcoin for Ethereum, for example, or Solana?
Yes, we have written an investment thesis on Ethereum. For the time being, over the long term, we are not extremely bullish on this investment thesis when compared to the investment thesis we have on Bitcoin. So for the time being, we are very much about Bitcoin only.
What's the role stablecoin are going to be playing in the future that you have described?
When I was a student in university, I took a few courses on banking, on central banks, etc. It's important to understand that the kiss of death for a currency is monetization of the debt. And this is why across time, it became obvious that central banks needed to be independent in the interest of defending the value of currencies. If you want a strong currency, you don't want the state to be able to monetize its debt too easily, because what I'm saying is obvious. The interesting point of view with stable coins, it is that stable coins are becoming a conduit with almost an automatic monetization of the debts. And it's going to be very helpful for governments in order for them to issue more and more debts without having to, abide by the constraints of what is supposed to be orthodox central banking. So I think that this will accelerate over time the devaluation of fiat currencies. It will, in the beginning, of course, be very helpful for... I wrote an article about 12 years ago, and this article was saying, as an introduction, that my father is surgeon and my mother is anesthesiologist. And what I wrote in the article is that the central banker is the anesthesiologist. The problem it is that when you're under morphine, you believe you don't need the surgeon. And in fact, borrowing becomes too easy. You believe you don't have to reform the economy, or you don't need to reform the state, or you don't need to reform the government. You have a couple of countries today across the world that they don't have the feeling they need the reform because they are under morphine. And when the central banker is injecting as much money as they need, they are encouraged, in fact, not to do the reforms. And over the long term, this is toxic. This is why in orthodox central banking, you don't want the central banks to lend to the governments. And as soon as the central banks begin lending to the governments, very often it ends up in a very, very bad shape. When they invented the euro and the European Central Bank, it was in the bylaws of the ECB, it was forbidden to the ECB to lend money to the governments of the Euroland. Unfortunately, because of political pressure, etc., they changed in a way this bylaw, and we see today that the government debts, whether in the US, whether in Japan, whether in the Euroland, are reaching levels that are more and more obviously unsustainable, and this will probably end in a very bad fashion for the currencies as a store of value. If something is too abundant, you don't want to store your value in this asset. You can store value in Picassos. Why? Because they have stopped printing Picassos. In a currency which is more and more abundant, it's very difficult to store value. And one of the most important use of currency is store of value.
So basically you're saying stablecoin are kind of an asset that works in this transition period.
Yeah, it's going to accelerate the transition, in fact.
Yeah.
Because the governments are going to be need to be less and less disciplined, because they have a conduit which will provide them with money which is easy to raise. And when morphine is for free, you believe you don't need the surgeon. So you can increase expenses, etc. You are less disciplined, you are less orthodox, and you're printing something which looks less and less like a sustainable store of value. And this is a goal that is probably, that the US probably have an interest to play. They need to devaluate the dollar, and the stable coins are a very useful tool to devaluate the dollar, in fact. Not from not against the euro, but devaluate it in real purchasing power.
Yeah, very interesting. Listen, last question. You mentioned at the beginning how innovative you have been in bringing something completely new to your investors, which actually are not the traditional high net worth investor. You have got some sovereign wealth funds as well. And I think one of the things that you kind of pay attention as well is about diversification, right, your portfolio. So I'm curious because, like Bitcoin, we used to say should be between 1% and 5% of, a diversified portfolio. That's maybe was an old thesis by some Wall Street. I think now we went a little bit forward. Tell me what you think about this when you are building a portfolio for those type of investors.
So diversification is, it's a very interesting question. In fact, being diversified means you have diversifiers in your portfolio. Nothing is a diversifier in an absolute fashion. Diversifier, something in asset is a diversified when compared to what you already own. A real estate could be a diversifier for me when in fact yourself, you are very much concentrated into real estate. If I don't have real estate at all, if real estate is a diversifier for me. If you have plenty of real estate yourselves, real estate will not be a diversifier. What is very interesting, it is that for most of the institutions in the world, Bitcoin is a diversifier. Yeah, for most of asset owners in the world, Bitcoin is a very strong diversifier. There is about 100 million millionaires in the planet. There is only 21 million Bitcoin. So if all of the millionaires want to own some Bitcoin, they will have to fight. What shall be the battlefield? The battlefield is going to be price. Okay, so in fact, it could sound bizarre that I am the inventor of the diversification ratio, and I started really Tobam around the most diversified portfolio, and now I am the advocate of only Bitcoin, of mostly Bitcoin as really a hedge. It's because of something which is obvious, which is that the exposure to Bitcoin is extremely low in the population of asset owners. It's incredibly low. Today, Bitcoin is about 0.2% of the wealth of the world. It's simply ridiculous. And so whether you should own 5, 10, 15, 25, or 50% of your wealth in Bitcoin completely depends on your own, risk aversion or risk appetites. It also depends on your liabilities. If you have a liability which is completely fiat-based, maybe you will need something else than Bitcoin. But I think it's very important to realize that for most investors in the world, Bitcoin is probably the most diversified asset in which they are not invested yet. Since most of my clients are institutions, it's really the main part of my speech is to tell them, you want to increase your diversification. In order to increase your diversification, you want to buy diversifiers. And given your specific portfolio, the strongest diversifier, the asset which is the most diversifying you away from the risk you already have, it's very often for most of the investors across the world.
Very interesting. It's just the role the investors are playing is so crucial in adoption as well. And not many are talking about, but I think, when as an asset manager and educating your investor about what could be an emerging asset class they should pay attention to, it's just a big part of the adoption as well. Yeah, great. Yves, thank you so much for coming.
Thank you very much, Steffi.
Fantastic interview. Thank you.
Thank you very much.